Happy New Year's, everybody. Welcome back to my channel. My name is George. I am your loan underwriter, and welcome to my channel. Because you made it here, just go ahead and start off and hit the like button. Like, why not? Like, why not start off by making your day and my day fantastic? So go ahead and just hit the like button. And if you're new to my channel, subscribe, hit the ring notification because again, if you want to see more of me, then you gotta do that. You just gotta do that. Well, today I have good videos to go ahead and react to about credit. We're gonna go ahead and be talking about problems with credit score, how to get approved for a personal loan, and why a credit union declined their member. So a lot of juicy stuff. So like, subscribe. I'm trying to get to 50 so far. I'm almost halfway there. I'm at 24 subscribers. I just need 26 more to hit 50. So definitely go ahead and help me out. And let's go ahead and jump into this video. Big problem with credit scores. That's my bad.
Make more good in the Kia Sportage X-Pro.
Yeah.
Kia, movement that inspires.
Don't.
America runs on credit. The three-digit score represents how likely a person is to pay his or her bills, and it impacts almost every aspect of an American's financial life.
It's like your passport into everything that you need to do as an adult.
And it affects so many things, not just access to credit. So your ability to get a credit card, a mortgage, a reasonable car loan. Landlords use credit reports and credit scores. So it'll affect your ability to get an apartment. Insurance companies use them.
Having a low or no credit score can have severe financial consequences. 42% of Americans said that their credit scores prevented them from accessing financial products.
And that's very true. Like, if you don't have a good credit score, you will go ahead and pay higher in interest rates. You won't get as approved as much. Exceptions won't really be made for you when it comes to approving for an application. So what I mean about this, so as a loan underwriter at my previous jobs working at banks, if you wanted to make an exception for somebody, credit was very important to go ahead and have. So by you having like a high credit score, that would go ahead and help you and increase your chances of being improved. Let me see what else. The one about the insurance, I think it's so ridiculous. I don't know why insurance has to do with credit. I think personally that should be illegal, but that is not the type of video we're here. So let's go ahead and jump right back into it.
Like credit cards or loans.
Life can become more expensive and more difficult as your credit score falls.
But some credit experts argue that the current credit reporting and scoring systems have major issues.
The current credit scoring system, as it stands, is flawed.
And this error of being fundamentally misaligned has huge ramifications across the system for millions of Americans.
Others say many of these criticisms are misguided.
The reality is that the credit reporting system that we have here in the United States is sort of like the crown jewel of the world.
A lot of the criticisms are based on some fundamental misunderstanding of how credit scores are calculated and how they're used.
If you take a moment to not be knee-jerk angry about financial service for a minute, then I think a reasonable person would have to conclude that these are actually good for consumers.
That's a lie. Like, how can they just sit here and just say that? The problem, this is my personal opinion. What the problem is, that they don't give us information about what affects your credit score. That you saw that was there was a president from TransUnion, no, the lawyer from TransUnion, the vice president from Experian. They're sitting here and saying that it's just misguided and that it is great the way that it is. No, it's not. We don't have the information we need to get ourselves from a low or bad credit score to a high credit score. or if we went from bankruptcies or charging off a whole bunch of loans or having a foreclosure on a loan, how do we recover from that? That is really where it should be. To me, I think it's okay, but it's not enough to be able to help people reach a high or a great credit score where interest rates are not affecting us so much. So off top, this is already BS that they're saying. So it's ridiculous. But let's continue.
Relative to a world without credit scores and what that would mean to our bottom lines.
So, how do credit scores work in America? And do they help or hurt consumers? A credit score usually refers to a number between 300 and 850, which represents the holder's financial stability and credit worthiness. The higher the number, the better a consumer looks to potential lenders.
Credit scores in the 500s are considered to be very bad. Credit scores in the 600s, we're starting to use terms like subprime, near prime, getting close to average, but you really need to get yourself into the 700s before you actually hit the national average, which is between 710 and 720, and then start working your way into the elite level scores, which are well into the 700s and certainly into the 800s.
Credit scores and reports are two separate things. Reports refer to statements containing information about your credit situation, while scores are calculated based on that information from the report.
The credit report is like the test you took. The credit score is the grade you got on the test. One is influential over the other, but they're not the same thing.
Today, scores calculated by Fair Isaac Corporation, or FICO, have become the industry standard, used by 90% of top lenders. They're calculated using 5 main categories: 35% from payment history, 30% from the amount owed, 15% from the length of credit history, and 10% for new credit and the types of credit you have.
It's based on an analytic algorithm, so we look at actual data patterns to say what helps us predict whether you're going to pay credit in the future.
One of the main benefits of having a credit score is that it provides a quick and empirically sound method of measuring credit worthiness. Americans are borrowing today more than ever, with household debt topping $16 trillion during the second quarter of 2022, making credit scores crucial to many businesses.
It allows lenders to make very, very precise decisions and have a very deep understanding of the likelihood of someone paying you back.
Experts say that
That is very true. Again, I'm proof of that as a loan underwriter. Being able to see this information and be able to make a excellent judgment based off if you're going to pay back that auto loan, personal loan, that mortgage, that student loan, that line of credit, the credit cards. Yes, like having access to your credit score is very important for us being able to help you get approved for a loan. So I'll give them kudos for that part. It's going to continue.
such a streamlined process is also the reason why Americans have been able to enjoy low interest rates for so many years.
The credit scoring system allows industry to quickly and cheaply make decisions about whether or not you're going to have credit. The cheaper it is for the lender to decide whether or not they're going to give you credit, in the aggregate, the lower the cost is for the lender, and hopefully that gets passed along to the consumers in a more efficient system.
Without this system, lenders are going to do what lenders do, which is they're going to mitigate their risk. What that means in practical terms is higher interest rates, because that's how lenders mitigate risk. They charge everybody more to subsidize the risk that's posed by everyone, or more declinations. It's easier to say no to an applicant than to book an applicant who you know is going to default on a loan.
Representing a person's credit worthiness using numbers also allegedly helped prevent lending discrimination. Lenders often relied on more subjective methods of evaluation prior to the invention of credit scores.
Credit scoring, when it was first developed, was an advancement. It is better than having some banker sit across from you and judge you and read the information in your credit score, because they bring a lot of their subjective analysis and their own life experience into the analysis. And if their life is different than your life, frankly, if it's some white guy sitting across from some woman of color, that analysis can be flawed.
If the information is not on a credit report, it is systemically impossible for your credit score to be influenced by it. What is not on your credit report? Things like your gender, your sexual orientation, your politics, your level of education, how much money you make, the socioeconomic makeup of your neighborhood, your level of education.
So we're able to assess credit risk looking only at the past behavior that is on the credit report and only to the extent that it predicts future credit.
Businesses nationwide are switching to Verizon.
Man, these people are just the type of way that they're just trying to manipulate us. It's wild.
Yet despite its good intentions, experts say that the credit scoring system still suffers from discrimination. A survey of 5,000 US adults found that more than half of Black Americans reported having a low or no credit score, compared to 41% for Hispanics, 37% for whites, and 18% for Asian Americans.
Credit scores are based on past performance, so you're going backwards in history to make a judgment about the future. The further we go backwards in history, the deeper the structural racism in the United States was.
Intentional racism that happened decades ago gets baked into the cake, into the system, into the institutions and policies of our society. And that kind of structural racism requires no animus, no intent, but it still hurts Black and brown consumers.
If your parent put your name on a bill because they had bad credit and then they were delinquent, you can turn 18 and inherit derogatory information on your credit report through nothing that you did. If you're a new immigrant in this country, your prior credit history doesn't travel with you. These credit bureaus are mostly domestic, so you show up with nothing. And by the way, a blank slate is a bad place to be in credit scoring. It means that you're unscored and your information starts off low and poor.
Wait a minute, that's not true. I don't know. I'd rather start off with having a blank slate in my credit than having bad credit overall, just because both of them are not both of them are bad, but at least people are willing to take more chances on people. That's why there's always a first time home buyer. That's why there's always a first time auto loan. That's why there's always a first time, it's not really first time, but a credit card. Like, you're more likely to get approved, and I have approved people that don't have credit, they're new to credit, and I've taken risks because of different things that I've looked at, job time, how long they've been at their how long have they been at their residence, are they, if they're buying a car, are they how much of a down payment it is, how much loan to value are we giving to the person. So there's different metrics that we can use when someone doesn't have uh, a credit score, to be able to make a excellent judgment if they're going to repay the loan, as opposed to someone that has bad credit, that previously had loans, but it went bad. So why would we want to give them a loan if we know in the if we know in the past, like the guy said, is to go ahead and look at the past to predict the future. So if someone charged off an auto loan or a credit card, why would we want to give them another loan? Especially if this recently just happened. If it's been 3 to 4 years, that's definitely different. Into consideration. We take that into consideration if it's been 3 to 4 years and you've paid everything else well since. But yeah, what he said was incorrect. It's better for you to have a blank slate, because then you can get a secured credit card easy by just having a blank slate of credit and not having a credit score. So let's hop back into this. 90% of Americans have no credit history or are considered unscorable. That's pretty good. Not gonna lie, I like that.
19% of American adults have no credit history or are considered unscorable by existing systems.
Sadly, what the scores do is they sort of amplify those inequalities, because they go in and they say, okay, you're already disadvantaged. Now you can be doubly disadvantaged, because the score then sort of objectifies that you are somehow not worthy of being given a chance. that you are somehow deserving of much higher fines and fees than everyone else?
Errors in credit reports can also often lead to miscalculated scores. A survey in 2021 found that more than a third of those polled found errors in their credit reports. Of more than 700,000 credit or consumer reporting complaints received in 2021, more than half pertain to incorrect information on their report.
For me, it was a different person named Aaron Klein who didn't pay their cell phone bill in New Jersey. I also happened to live in New Jersey for graduate school, and this stuck with me for years.
1 in 20 have an error so serious it could cost them either the ability to get credit or a job or an apartment.
However, those within the industry argue otherwise.
When we look at our data, it is astronomically reliable. So we're constantly auditing and evaluating our data. Our regulators are examining us on a regular, ongoing basis. So they're looking at all of our systems around data integrity, data reliability, how we engage with consumers, et cetera.
Under the Fair Credit Reporting Act, credit bureaus are responsible for correcting any inaccurate information on their reports. But research has suggested that many consumers find errors difficult to get fixed.
Credit bureaus are like a judge that always rules for the defendant. So if your mortgage servicer says you're late, even though you really were never late, and you have documentation that you were never late, it will still show up as late.
Fixing mistakes.
That is so true. See, this is what one of the problems is that so in order for someone to report information to your credit report, they gotta have an account with all three credit bureaus, which is called data furnishing. So data furnishing is pretty much just providing information to the credit bureaus, which then they update your profile. So that's what the problem is that they literally just take whatever the information the data servicer says as accurate instead of having them provide information and prove that it is true that this person was late, or maybe this account is in collection because they owe us. And it's so frustrating because obviously in the earlier times I've been in those situations where things have been in error have been reported, and they just do it, and what you got to do is dispute it after it already tanks your credit score, which is bad because again, like they said, this will affect you for getting a car loan, credit card, mortgages, job, insurance. It affects so much of your life, and for them to just let that just go and happen, it's ridiculous. Like, to me, if I had an input, I would say, okay, if they want to report it, you have to get required documents and then send the consumer a email or a notification that, hey, this person is trying to report this collection. Do you want to dispute it? And then you also provide your information, because that'll go ahead and keep it fair where these people aren't reporting errors and then you don't know, because a lot of people are not familiar when it comes to their credit score and what's supposed to be there and not. So, but that's why I'm here. George, loan underwriter, was a certified credit counselor. But anyway, that's why I'm here. That's why you're on this page. Like, subscribe, come on. You want more? I'll give you more, but I need you to subscribe and hit the ring notification. But yeah, that's just my 2 cents when it comes into this. So yeah, let's go hop back into it.
Is expensive and time-consuming for the credit reporting and credit scoring industry. They are not incentivized to have accuracy, particularly if the mistakes are symmetric and even out.
Our entire role in the consumer credit ecosystem is to provide reliable, accurate information. If we were unable to do that, nobody would have any interest in engaging with us whatsoever. Our position is that the system only works and we can only succeed if our data is incredibly reliable and accurate, and that means engaging with consumers continually to try to make sure that they're able to effectively managing their credit and that they're able to effectively feel as though they can interface with us about any concerns that they have.
Another main concern is the lack of regulation and oversight that can ensure fairness and transparency within the industry.
I think the idea that the industry is unregulated is a fiction, and we operate in one of the most highly regulated spaces possible.
you have a 50-year-old federal statute called the Fair Credit Reporting Act, which essentially mandates everything having to do with credit reports, from our rights to challenge information, our rights to freeze our credit reports, our rights to get copies of our credit reports. You have the Consumer Financial Protection Bureau, which regulates credit bureaus vis-a-vis credit report accuracy. You have the Federal Trade Commission that shares that regulatory responsibility.
I must say that the Consumer Financial Protection Bureau, which took over oversight of this industry about 10 years ago, they've done a really good job of trying to reform the credit bureaus. But I would go further than more regulation or even more laws.
This is crazy.
You see how they just cut her off, and how she was about to make a point. They're saying, nah, we can't let her say that. That's my assumption. Oh my God, like, we do need more regulations and laws, but that benefit consumer. That's why it's called consumer reporting. Like, it's crazy.
Made several changes in response to the criticisms against the industry. Perhaps the biggest change comes from the use of alternative data to improve accuracy and inclusion.
They've started trying to incorporate other quote-unquote non-traditional information. For example, if you pay your mortgage on time every month, your credit score is going to increase. But if you pay your rent on time every month, nothing happens because that information isn't reported.
We've innovated with scores like the FICO Score XD and the Ultra FICO Score. They augment traditional credit data with rich alternative data, such as how you pay your telco utilities, as well as information that's in your checking and savings account.
I wouldn't save up.
The point of these new scores is to allow consumers to find other ways beside the
I wouldn't do that. I wouldn't sign up for experience credit boost. Like that stuff when it comes to uh, looking from a loan underwriting perspective, whenever we see people are reporting like their utilities, their phone bills, through credit boost and everything else that you'll get through there, we don't care about that as loan underwriters. That has no determining factor if you're going to pay back the loan. That's just something that has just been proven with not just me, my other colleagues. Like that doesn't really mean anything. Like that, there's nothing to consider when it comes to someone paying their cell phone bill. It's not something that can prove repayment history, like, or payment history, because again, it's not a big enough what is it called, a big enough like balance for us to really to care, because that's really when it comes to auto loans, and you're trying to scale up and go from like a smaller auto loan to a higher auto loan, because you had let's just say you had a $1,000 car loan. Well, actually, that's a bad example. Only because you had a cell phone bill. Only because you had a cell phone bill, and now you're trying to apply for a $5,000 auto loan, doesn't mean that necessarily you'll be able to handle a $5,000 auto loan because of that. So yeah, so really just stay away from that stuff. To me, it's just more information they have about you, and more that they can add to their system and manipulate and sell your data, because then these credit bureaus do sell your data. So by not giving them as much information and just working with what you have, honestly, I would just stick to that. So let's go and continue.
the historical credit to demonstrate their ability to repay credit.
More regulatory changes could also be coming. Two bills, the Protecting Your Credit Score Act and the Comprehensive Credit Act, were both passed by the House in 2020, aimed at overhauling the credit scoring system with more oversight and provisions aimed at protecting consumer credit. They have yet to be put on a vote by the Senate.
One of the initiatives that we're championing, because we really think the solution to a lot of these concerns around how do you help consumers access financial products is an alternative data piece of legislation called the Credit Access and Inclusion Act, which would really encourage the reporting of rental data, utility data, bring new data into the system that would allow literally millions of Americans to access financial products and services.
It doesn't help.
But ultimately,
Oh my
credit in its
God.
current state is dependent on the consumer's financial decisions.
I'll tell you the two things that you need to do, and it will be impossible for you not to have a good score. Number one, never, ever miss a payment on anything, ever. That's easy. It's writing a check at the end of the month and paying your minimum payment, right? Number two, you got to stay out of credit card debt. And I'm not saying don't use credit cards. I'm saying don't max out your credit cards. Don't use them as a supplement to your income or to keep up with the Joneses or to impress somebody. Pay your bills on time, stay out of excessive credit card debt, lather, rinse, repeat, and you're going to have fantastic credit scores.
I agree with
You know,
that.
how you manage your credit is a sign of responsibility. It's not. A lot of people have negative items on their credit report because they were the victim of bad luck, not because they're bad people. So they got sick, they lost their job, and now they can't pay their bills, and their credit report's going to stop them from getting a new one? That's crazy.
I agree with that. Well, there you have it. Wow, big problems. So you guys heard a lot of my frustrations on this, and I I think these credit bureaus just have too much power, and I'm actually gonna look into that bill and see what that bill is gonna do, and hopefully make it a channel. If you definitely want me to do a video on that, like, subscribe, hit that ring notification, so you guys can go ahead and stay up to date on the most credit news. So, all right, so let's go ahead and jump into this other video on how and where to get a personal loan. Let's see.
Whether you're looking to consolidate debt, make a large purchase, or just make some improvements around the house, a personal loan may be a good option for you in getting the cash that you need. Hey, I'm Brianna with Bankrate, where we've been a trusted source in finance since 1976. And in today's video, I'm going to be walking you through 8 steps that you should consider taking when taking out a personal loan. But before we get into that, I just want to talk to you a little bit about why a personal loan is a good option. So typically when you need money for something like an emergency or just something that was unplanned, you'll have 3 options in getting that funding. They are payday loans, credit cards, and personal loans, like we'll talk about in a few. The thing with payday loans is they are extremely predatory, and we want to avoid them by any means necessary. Interest on payday loans can be upwards of 400%. And typically when you borrow through a payday loan, that money is due back within 1 to 2 weeks. And if you don't have it, they can come directly into your bank account and take it from you. So again, we want to avoid payday loans. But when we look at credit cards versus personal loans, the average interest rate on credit cards is about 16%. Whereas the average interest rate on a 2-year personal loan is a little over 9%. So personal loans are the cheapest option and really the best option for the things that we're going to talk about today. So with all of that being said, let's go ahead and hop into the steps that you should consider taking if you want to take out a personal loan. Okay, so the first step is to run the numbers. You want to know how much money you need to borrow, and you want to make sure that you consider a few things when you're coming up with that number. The most important is that a lot of lenders are going to charge you an origination fee, which is taken out of the amount that you borrow. So you want to look into what that origination fee might be and consider it when you ask for the amount that you want to borrow. Also, in running the numbers, you want to look at what your monthly payment will be once you borrow. And I highly recommend using a loan calculator. And if you head over to bankrate.com, we have a dashboard where you can personalize your finance experience with dozens of different loan calculators. You can personalize it to show you the rates that you're interested in seeing and really just all of your finance needs. When running the numbers, I highly recommend that you check out the Bankrate dashboard. Okay.
When it comes to that loan origination fees, places that won't charge origination fees will, one is always credit unions. I know that for sure. I have like 2 credit unions, and they've never charged me an origination fee for a personal loan. A bank, I was like, I think a lot of banks or majority of the banks don't charge an origination fee, but I would definitely look into that and just ask them, be like, hey, do you guys charge an origination fee? If they don't, great. A lot of financial institutions like Upstart, I know that they also charge one, maybe Loan Stream. I think that's one I saw on the those places that are mostly about that's all they do, just personal loans. Um, yes, they will charge a loan origination fee because really that's all their business model is just do personal loans. So yeah, I was like, that's something, for as a FYI, that go to a credit union, they will never, I've never seen a credit union charge you an origination fee. So that's why I like credit unions and then the reason. Let's get back into it.
Okay, so the second step that you want to take is to check your credit. So most lenders are going to require a credit check, and you have to have at least fair credit to qualify for a personal loan. Now that means that on the low end, your score is at least a 580. But keep in mind that good to excellent credit is not only going to be more likely to get approved, but your interest rate will be a lot lower. So if you check your credit and you find that your score is a little bit lower than you expected, I highly recommend that you go to annualcreditreport.com, where you can pull a full credit report from all three of the credit reporting bureaus, TransUnion, Equifax, and Experian. From that, you can dispute anything that shows up that you don't agree with. And that could be a major step in you getting your credit to where you need. Now, if you go through all of that and your credit still isn't in that fair range, I highly recommend that you hold off on applying for a personal loan and really work to improve your credit so that you can get the interest rate that you desire and also just make sure that you're getting approved. Okay, so the third step is
I was waiting for this. This is the most important section of this video, I think, for me. Because again, the name of the title is How and Where to Get a Personal Loan. They're supposed to tell you how to get a personal loan. When I think of how, it's how do you get approved for a personal loan is really what it is. And if you look at the information she said check your credit score. So that's like surface level, very like minimum information that yes, you should be checking your credit score because if you have a low credit score, then also you're going to get charged more interest. You won't get approved as much. Lenders aren't willing to take that chance on you. So that is what she should have went into more depth was you have a collection within 2 years. Because again, when we're looking at your credit, we have access to um so many years, but the active but information will show up there that if you have a collection, how long ago was that collection? How much was that collection? Who sent that account to collection? What account was it that was charged off? It, and if you see those errors, that's something that she said, definitely putting in a dispute. I get going to the annual creditreport.com website, which it's not a bad tip, but it's like you got to know what you're looking for. And if you don't know what you're looking for, then how is it that you can improve your credit? Like she said, majority of the people don't know how to fix their credit. Why? Because we don't have the access to the information that we do, and we have surface level information like payment history, the amount owed on your credit, your length of credit, your credit mix, your new inquiries. Like that's all the information that we just have. There's nothing more outside of that we have that we can educate. So it's like, okay, let's say if we miss the payment, how do we come back to recover back to the score or even improve from that score, which is like what she was just missing. And it lets you know that they really, well, based off the video, they don't know what they're talking about. Like, oh, you can't just tell someone to pull a credit, look at their credit, but not tell them what they're looking for. So it's like, so here's a rundown on it. So if you want to get approved for personal loan, if you have any collections, get them disputed. If they're wrong, get them disputed. Because we will take that into consideration. And when we're underwriting, banks, or at least the banks that I've worked for, they have a limit of how much collections, the dollar amount of collections they're willing to accept. So, see if they're willing to accept a total of $1,000 in collection. So it's just like things like that. Also, we'll look to is make sure that you're paying that you're not 30 days past due on any of your accounts that are reporting to the credit bureau. Have you had any personal loans before? If you've never had a personal loan and you're trying to get this will be your first personal loan, don't expect get to get approved for a high amount because we have nothing to compare. We don't know if you're going to pay back a $20,000 personal loan because we have nothing to compare. Yes, let's say if you've been paying in $20,000 auto loan, that's different. If you stop paying for that auto loan, all the financial institution has to do is just take the car and sell it. And if you still end up owing money after they sell it, then obviously that will just show off as a collection. So that is like the differences when it comes to like an auto loan and a personal loan. So yeah, so a personal loan, like, so if you never had one, you're going, don't ask for a lot. You won't get approved for a lot unless you have mitigating factors that will help us most likely want to give you a high personal loan. A lot of that can be like if you have assets, if you have a great relationship with the financial institution, if you have a lot of banking products with them, they can use this stuff to offset and approve you for a little bit higher personal loan. It's not gonna make like literally it's not gonna be the it's not gonna be like oh yeah, because you have assets and great relationships, it increases your chance of getting approved for a big personal loan. No, like we still have to take account to your income, how your credit has been, where your score is. So yeah, like she really didn't explain a lot of it um when it came to the credit aspect. So she missed the target, and this video is just misleading. Like it's wild, and they have 100K views. Can you believe that? 100K. That's crazy. Get me to 100K. Like, subscribe, hit that ring notification. Remember, trying to get to 50 subscribers and gonna continue trying to go from there. Let's go ahead and continue.
To consider your options. Now, depending on how your credit was in step 2, this could determine whether or not you'll need a cosigner for your loan. And if it is the case that you do need a cosigner, you want to start thinking about people that you can ask. And if you're unable to find a cosigner, there is another option in taking out a secured loan, which means that you have to put something like your house or your car up as collateral on the loan. It is important to remember that if you fail to pay your loan back, the bank can come and seize these items. So that's just something to remember about a secured loan. And one more thing you want to be considering during this time is who you may want to borrow from, whether it be a traditional bank, a credit union, or an online lender. So these are all things that you kind of want to start thinking about and preparing for. Okay, so the fourth step is to choose your loan type. So depending on who you're borrowing from, some lenders may require that you provide what the reason why you're borrowing the money, and they can accept or deny you based on that by itself. So I definitely recommend that you check out the Bankrate personal loan marketplace, because on it we have a lot of the different reasons that people take out personal loans and other information like interest rate and things of that nature on the different types of loans. Now, speaking of those different types of loans, let's just run through a few. So one of the most popular reasons that people take out personal loans is for debt consolidation. And essentially what that means is that you use the money from the loan to pay off all of your other debts like credit cards or whatever it may be. And now you have all of your debts in one big loan. And now you're only making one monthly payment as opposed to all the separate monthly payments that you were making before. And also typically the interest on the personal loan is going to be lower than the interest that you were paying before. So Again, the most popular reason that people take out personal loans. A few of the other reasons, home improvements, like I mentioned before. If you want to build a new deck out back or fix up a bathroom, a personal loan is a great option to doing these projects around the house. Medical expenses is another big reason that people take personal loans. I think that it kind of lessens the burden of whatever you have going on medically at the time and allows you to focus on the medical and then focus on paying off the loan later. And the last reason I'll give is weddings. A lot of people use personal loans to pay for weddings and then worry about paying them off over time. So again, you want to consider this. You want to be very transparent with your lender and just start thinking about this prior to going to them. Okay, so the fifth step. Now that we've gotten things like the credit and considering our options out of the way, we want to begin shopping around for different lenders. Now, this is really important. You do not want to go with the first lender and the first interest rate that you're offered. It's really important to shop around, get a feel for what your options are. And like I previously mentioned, there are 3 different types of lenders that you want to consider looking at and comparing against one another. Traditional banks, credit unions, and online banks. Now, I highly recommend that you start with the bank or the institution, whether it's a credit union bank, that you have a history with, that you're banking with. Maybe you have a checking account with them. And this is very helpful because typically if you're a valued customer or you have a good history with this bank, they may work with you a little bit better, more likely to approve you and give you a lower interest rate. And one more thing that I want to throw out there about the different types of lenders that you
See, I told you. I know what I'm talking about. You said it right there. Having a good relationship with the financial institutions. I'm a genius. Let's get back to it. Just wanted to glow.
You can go through are that if you do look into online lenders, typically they'll run a soft credit check, which means that it won't impact your credit score, but you can still get the information that you want and need to consider whether it's a good loan for you. So don't shy away from those online lenders because there is that benefit to them. Okay, so the 6th step that you want to take is finally to pick your lender and apply. So we've done all the research, we've done our due diligence, and we're finally at the application stage. Now, the great thing about this is that a lot of lenders have everything completely online, which makes it so much more easy. But there is some information that you want to have on hand, just things like your name, your address, obviously how much you want to borrow, like we talked about previously, and what you're borrowing it for. And you also want to have your income and employment information on hand because it's very likely that the application will ask for that as well. Okay, so step 7 is to provide any requested documentation. So we've filled out the application, we've provided that very basic information that they've asked for. But again, depending on your lender, some banks will ask for documentation to prove the things that we put on our application. So they may ask for pay stubs or proof of address, proof of employment. And the faster that you're able to provide this documentation, usually through uploading it onto an online portal, the faster you'll get an approval decision and the faster that you'll get your money. So you want to have these things on hand and prepared. So the 8th and final step, we finally made it to the last step, is to approve the loan and be prepared to start making payments. So after you've submitted all the necessary documentation and your application, the lender will get back with you and let you know whether or not you've been approved. And if you are approved, it is important that you accept the loan, which means that you're accepting the terms and conditions that go along with it. And then you're also very familiar with when payments are due, which I'll get to in a moment. When you accept the loan, you typically can expect to see the funds in your account within a week. But a lot of online lenders, again, another perk to them is that they typically get the money to you a little bit faster. So maybe sometimes in 1 to 2 business days. And as I mentioned before, you want to make sure that you're very clear as to when your first payment is due because you want to be responsible in repaying these loans. A few things about repayment. Typically, if you sign up for auto pay, the lender will lessen your interest rate, sometimes up to 0.25%. So that's an option that you may want to consider if it's feasible to you, is to use auto pay. If possible, pay back a little bit more than what the minimum payment is so that you can pay it back faster and that you end up paying less interest over the life of the loan. So just a few repayment tips there. But again, we have plenty of repayment calculators over at bankrate.com. You can put them on your dashboard. forward and use them throughout the life of repaying your loan. Okay, so there you have it, the 8 steps that you should be taking if you're considering taking out a personal loan. I hope that you found them helpful.
You said it. There you have it. Her information wasn't bad. It really wasn't bad. It was very surface level, but I think in this video they're helping a different part of people that are trying to see about getting a personal loan, as opposed to my perspective of, okay, this is how you get approved for an auto loan, or not an auto loan, for a personal loan. Like, your credit needs to look like this. Your income needs to be at this certain amount. Your debt to income can be like this. These are things that credit unions and banks are willing to, well, more banks than credit unions, but banks are willing to take exceptions for. So it's like, well, that's more of what I was hoping for this video, because again, it says how and where to get a personal loan. So just this was a big fail for me. Wasn't bad, but like, no. But yeah, let's go ahead and move on to the last and final video. Hang on there. And again, if you're barely, well, this is not a live, but like, subscribe. 50 subscribers. Let's go. Let me know if in the bottom you guys have any credit questions. I would like to definitely answer any credit questions you guys have. Don't be afraid. If you need some consultation, I am excellent. I've been a loan underwriter for 10 years. So I know what it takes to get approved for loans. So I have a really good insight. I'm familiar with practices on how to get your credit score increased. So definitely not email me, but put a message or message me, and I'll definitely like to help you guys. Let's go ahead and hop into this last final video. Why Navy Federal denied my car loan? Why you do him like that, Navy Federal? Let's see why. Let me see. I wonder what it is. Results, Navy Federal credit score. Interesting. All right, let's take a look into it.
What's up, money growers? Jacob back here with another video, coming to talk to you guys today about something that could be very impactful for a lot of you, because I know oftentimes people are looking to get car loans when they're looking to buy a car. So I'm actually going to share my experience that I had with Navy Federal in particular about a car loan and the whole process. You guys saw I did a video already about how to go through the pre-approval process with Navy Federal, how to apply for a loan with them. And like I said in that video, hey, hang around and you're going to see the results. Well, here's my results, and I got denied the car loan. This actually happened several months ago. So also, like I said in the video, I actually was I ended up getting a better rate with the dealership anyway and better terms. But nonetheless, that tells you in the video I made a mistake that actually was pretty costly when it came to why Navy Federal denied me for the car loan. So here was the deal, which, before we jump in, please subscribe to the channel, okay? I know a lot of you love the Navy Federal content on here, and it does very well on the channel. So I'm going to help you guys with my personal experience here with the car loan. So please tell me if you've had any experience with this, particularly with Navy Federal. I would love to hear what you have to say with your experience with the credit union. So let's talk about this, why your car loan can get denied. So when I was shopping for a car several months ago, I was renting a car at the time because the car I had gotten totaled. So I was renting a car, was going to a couple different dealerships. I ended up not buying, because I bought off Craigslist before, and I've only bought off a dealership in Vegas once before this. Yeah, just once before this. That was it in Vegas. So it was only my second time actually in Vegas buying from a dealership. So I decided to look at the dealerships, and one of them I went to, this is the one I ended up eventually buying from. Dude, they ran the shit out of my credit when I went there to the dealership, and most of them were actually hard inquiries on Experian. So I did get notifications from Experian, from TransUnion, and from Equifax, but most of them were from Experian. So you saw my video, how I got 6 or 7 hard inquiries removed in like under 10 minutes. That's what a bunch of them were from when the dealership ran my credit. So I actually I didn't think that many. I only had a handful on TransUnion, and Equifax I think only had like 1 or something like that. But I did that first at the dealership when I was looking for the car I liked. But so I had that done. So that actually happened first, and then I went to Navy Federal. I'm like, let me see if I can, what kind of loan I can get through them, because the dealership gave me the rates that they could give me. So they came back with 2 different, payment plans with 2 different rates and that kind of thing. So I was like, well, let me see what I can get with Navy Federal, because, my thinking was I want to, do business with Navy Federal. I would like to, if I'm going to get a car loan, I'd like to get it with them. If I'm going to get like a personal loan, I want to get it with them, which I looked into those before, and you can get better rates to other places. So Navy Federal's personal loans, they can be good, better than many others, but they're not the best. So at least as far as interest rates. So I'm like, okay, well, let me see what we can do on a car loan with Navy Federal. So I know they can be pretty competitive when it comes to car loans. So I go through that process. You guys saw in the other video online, do the whole thing. They didn't give me an answer right away, so I had to wait to get my answer. And I was told that I had been denied the loan. So that's what happens. You'll get denied the loan, and then you're going to get a letter in the mail later telling you why. And I might have my letter around here somewhere, but it's a pretty generic letter. I have a few notes written down here that I'll share with you guys. But just pretty generic letter saying that they had, denied your request for a loan. So I actually called in and spoke to a rep when I got the message saying, hey, you've been denied for the loan. Now, one thing I did do was I did ask for a few $1,000s more than I needed for the loan. So I didn't actually need that much as I requested. But I didn't want to have like some buffer zone. So when it came to buying the vehicle, so I added a few thousand more than I did need. So, full disclosure on that part. But so I went to the dealership first, and then, so they ran the credit. Then I went and got pre-approved, or tried to get pre-approved with Navy Federal. For future reference, you probably want to do that the other way around. But hey, you know what? Yep. The world of finance, that's part of how you, I think the best way to learn is by doing. So, especially coming from someone who's done a lot of work on the academic background, where you sit and just listen to people talk, much better to learn for most people by actually doing. So, in the future, hey, you get your pre-approval.
When it comes to your credit, are you keeping score? Stay on top of your credit and plan for your future.
Shut up.
From your bank or credit union in the future, then if you don't have the dealership, check your credit, run and see what they can do. Then you can compare easier that way. So the fact that happened, when I spoke to the rep at Navy Federal, he goes, when the dealerships do that, he goes, you get hit with all those inquiries. He goes, that's probably, why you were denied for it, because my income was definitely good. And then also, my credit score was good. My credit score was in the 770s. So at the time, and my credit score over the last year, I think the lowest it's been is like in the 740s. And ever since then, it's been 750s up into the 780s. Never got to 800, but it's been somewhere around there. So my credit score was like in the 770s. So credit score was good. Income was good. I have a credit card with Navy Federal, a flagship card. I've never had a late payment on that card. I've been with them for almost 2 years now. So at this point, it was over a year and a half I'd been with them. Never had any real major issues or anything like that with the credit union. So I thought I was going to be in pretty good position. I wanted to keep doing more business with them, but obviously, didn't get to do it when it came to the car loan. So it could be a chance to refinance in the future. Navy Federal does offer a refinancing option where I think they give you like a couple $100 if you refinance with them. So what you want to keep in mind though too with Navy Federal is, remember the rep told me, he was like, they won't counter offer like on your car loan. They won't say, hey, you wanted this much, but we're going to come back and give you this much. He's like, they won't do that. He did say that you can do an appeal, but I remember when I talked to him, it didn't sound very appealing, no pun intended, because he was saying it's not like credit card reconsideration. You could just call in and say, hey, I'd like to, would they reconsider, this limit increase, or they reconsider approving me for this credit card? It's not like that. He said, it's not very often they actually overturn those. He goes, and there has to be like some real legitimate reason why, not just like, you want the loan. So he said, he goes, that's probably not going to happen. So I was like, damn, okay. So, with the high income I had, with the good credit score, he goes, because it's probably those hard inquiries. He goes, that did you in. So, it happens. It's kind of unfortunate. So I wanted to have the car loan with Navy Federal, but it really wasn't. Ultimately, it wasn't a big loss because, like I said, I did actually end up getting a lower interest rate. Navy Federal, their lowest is 4.19%. I got an even lower one offered to me with the car dealership. So, I mean, when you got a good credit score, car dealerships will, do those kinds of things for you. Lots of businesses will do those kinds of things for you. So, for me, it was more like, okay, I saw what the dealership had to offer. I liked what they had to offer, but it was like, let me go to my credit union and see, if I have an option over there. And then I can compare the two, because if it was pretty close, then I was probably going to go with Navy Federal just because I wanted to even have a stronger relationship with them. But that didn't work out that way. So, didn't work out that way. Not a huge ordeal. I ended up going with, loan that I got through from the dealership, and, buying the car from there. And, things have been, they've been grand ever since. But yeah, sometimes things like that, those will do you in. All those hard inquiries can be, even if you have said a good score, good income, those kinds of things, Navy Federal may not be so lenient just to let you have that, car loan, just because some of the things that you might think are important, and you think, hey.
Let's get into it. Okay, I have a few indication. I think I'm gonna go ahead and list them. So I think a reason why he didn't get approved for what he was asking for is he was maybe asking for too much than what his credit history provides. So what I mean is, remember when I said earlier in the video, or if or if you didn't see that, so let's see if you have a pay history of only paying loans that are $20,000. So let's see, that's like a $350 payment. Let's just say that. Roll with me. And then you're now trying to get into a $60,000 car. You're going up 3 times the payment, and there's nothing to compare that of if you're going to pay the $60,000 car. For me, that is something that I'm pretty sure is the reason why he got declined. Is because he was maybe asking too much than what he has already established on his credit. Because when it comes to underwriting, we don't always want to be the first people to give somebody a higher payment that we haven't seen before, which is it's weird. I understand it, but I don't know. I was like, I think they should be able to take a little bit more risk when it comes out. I'm like, okay, well, if we're not gonna, give him 60, let's try 50 or 45 or $40,000. But that's to me the biggest indication that has happened. He says he has high income, so if we're taking that, debt to income is not an issue for him. He said he's never missed a payment with Navy Federal, which then to me is, does he have a lot of, well, if he had like a high credit card balance, that really wouldn't then be an issue, because again, going based off what he said he's at a 770 credit score. You normally don't get that by having a high utilization of credit card debt. Yeah, I the inquiries not really like uh, when we look at it, we know as underwriters that if we see someone that has a lot of inquiries for an auto loans, we know they're shopping to get a new car, so it's not really going to be like a huge deal when it comes to getting approved. We just want to know if you're going to be opening up, or if you've already opened up any accounts with those lenders. But yeah, to me that's the biggest thing, is he was asking too much than what he has on his credit to get him approved for that. So I think, yeah, he was definitely ambitious. And when it comes to getting financing through the dealership, which I've done underwriting for people that apply through dealerships, yeah, they want us always to give them the max that we can give them. So I'm not surprised he did get it eventually through the dealership, because again, if one of the finance company the dealership works with doesn't give it to them, another will. So that's really what makes it competitive and why he got approved for it. So not surprised. But yeah, that was actually a really good video. That was probably one of my more favorite ones, to give you a little bit more insight of why he didn't get approved. But yeah, hey guys, thank you so much for being on this adventure with me. Again, remember, on the road to get 50 subscribers, go ahead and like, subscribe, and hit the ring notification. If you want, go ahead and share it. That'll definitely help me get to getting those subscribers a lot more quicker. See you guys on the next one. And again, contact me for credit advice, credit consultation, or any credit questions you have below. See you.